welcome to this quick news update. Aditya Birla Group company Ultratech has announced that it will be acquiring JP Associates cement business for an enterprise value of 16,500 crore rupees. Now joining us now on the phone line is our in-house cement expert Nigel D'Souza, as well as the Ultratech CFO Atul Daga, who is also with us. Sir, thank you so much for joining us. Nigel, over to you.
Hi, Mr. Daga. Congratulations first on this big deal that we have been long waiting. Mr. Daga, a quick breakup first. The 16,500 crores is the enterprise value. Could you break that up for us in terms of debt as well as equity?
This will be a all-debt deal.
All right, all debt.
So basically, we'll take over the debt of the existing company and refinance it.
Okay. All right. And we are aware that the total cement capacity of JP, that was outstanding was roughly around 25 million tons, thereabouts or so. This is around 22.4 million ton. So what exactly has not been acquired? Any particular reasoning for any plant that's not been acquired of the JP group?
Yeah, so there is one capacity called Reva, which is, I think, 3 million tons, which is not part of the deal. There is Chunar, which is not part of the deal. There are a couple of other plants which are there is a company called AP Cement, which is not part of the deal. And there is a capacity of 4 million tons, which is yet to be commissioned. So,
all right.
So there will be a mismatch in your quantity calculation to that extent.
All right. Also, how long will it take to get the entire cement capacity? That's a 22.54, capacity up and going, and also what is the investment needed? As you said, that 4 million ton plant, it will require some kind of investment. So for that 4 million ton to get up and running, what is the amount that you all have invested so far?
So that is a fixed amount of about 470 crores that is required to be spent for the commissioning of that 4 million ton grinding unit. It might take about 2 years to commission. And the overall process for rest of the plants, we expect about a year to complete the entire transaction. So it will be typical of a court process, multiple courts involved, and that's that much time taken.
Okay. All right. And that 470 crores is included in this in the 16,500 crores?
No, that is over and above.
Over and above. All right. Great.
Yeah.
You're talking about closing this down the next year and a half or so. The street really wants to know, whether or not there's going to be any CCI hurdle this time around. Will there be any regulatory hurdle this time around? And also, the MP unit, the deal didn't go through because of the MMDR bill. Now, again, it's not the entire cement capacity of the JP group. So why exactly, do you guys believe that this time around it will go through?
Yeah, first and foremost, on the regulatory front of the CCI, all these markets are totally new for us, or we are not the number one or very high, in terms of capacity share in those markets. Some of the markets we are not present at all.
Okay.
Let's take the case of coastal Andhra.
Okay.
We are not present over there. MP or Satna cluster, we are not present. The deal had to be called off because of the MMDR Act.
Right.
That is the same market. UP, we are present only towards UP West. We are not present in UP East at all.
Right.
Himachal, we are not present at all. So all these markets are totally, virtually new and additional markets for us.
All right.
And that's why it's not a competition, problem.
Right. All right. And what about the limestone reserves? Do you believe that they will get transferred as well? Are all the limestone reserves in JP Cement? So are there some of those limestone reserves that are in JP Infra's books? And do you see any kind of problem because the last time around, because of the MMDR bill, it didn't go through? So you don't see any problem on that front?
No, because they are all in the company that we will be acquiring. So there's no transfer of mines that will take place. And
all right.
all the limestone reserves are secured from that.
Okay. Mr. Daga, just one final question then. What is the current EBITDA per ton of the blended EBITDA per ton of this 18.4 million ton, because the 4 million ton will require commissioning. So the 18.4 million ton, what is the blended EBITDA per ton? What exactly is the current utilization levels? And when do you look at, it going up to Ultratech's EBITDA per ton of around 850 rupees per ton or thereabouts?
Yeah, so the blended EBITDA per ton will be somewhere around 600 to 700 as of now.
Okay.
And, after, sorry, what?
Capacity utilization? So currently of this...
Capacity utilization somewhere around 60%.
Okay.
And after taking over whatever overhauling is required, give it a 6 months time, it will ramp up to the Ultratech standards and EBITDA performance levels.
All right, Mr. Daga, thanks so much for joining in and giving us all those details. Pleasure as always talking to you. Arundhati, back to you in the studio. That's some good news coming in for the Ultratech Group on the whole. They're pretty confident that this deal is going to go through 1 year to around 1.5 years, what they're looking at. They believe that, in fact, currently it's at around 600 to 700 rupees per ton, and EBITDA per ton basis functioning at 60 to 70% capacity utilization, and a year and a half is when they expect this deal to go through. Back to you, Arundhati.
Thank you so much for that, Nigel. Good news coming in. That was the Ultratech CFO, Atul Daga. Time now to go back to the new NSE FinWiz show. Thank you so much for watching.